Well, I'm going to the city and I'm gonna do a silly show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week. And hopefully, lots of great ideas and opportunities for you throughout the show. Well, the stock market resumed its decline this week after having a big rebound in the previous week. Investors had plenty to worry about, and were not shy about selling into every rally attempt. International issues stayed in the focus. The Brexit deal, well, that seems like it fell apart, and the questions are whether or not May can stay in power, and there is political turmoil there in the UK. Italy, their budget issue still in the forefront, as they're way off from what the EU would like to see their deficits. And the question is whether whether they're going to stay in the EU. That's been coming up in this last week, and that's a big threat to the euro, which has now broken down. You can see that by watching our Future Speak show. In fact, there's threats that we're going to be hearing about Italy's exit, or the I-Texit. Interesting word. Also, news around about China, and we've had a lot of it here on Friday, regarding the potential for a deal or no deal, and basically whether or not there's going to be a deal. That there's doubt being thrown up around there a lot. And the president came out Friday and said that he thought they wanted to make a deal, and then it seemed like just a whim. So stock market has been moving around a lot here on Friday. And China's got plenty of issues with their economy seemingly slowing down pretty consistently, and a massive amount of unsold real estate, which has been a story around for a long period of time about China. And then there was the earnings reports, and Apple just absolutely got rocked early in the week on their slowing iPhones sales, and we're going to show you that chart later on in the worst for the week. And that, of course, weighed on the NASDAQ prices. And then KB Home came out, not a big one that should really affect the markets, but we talked about the home builders also in our Thursday video for our members on poor earnings in there. KB Home moving down pretty sharply, hurting that group. The retail stocks really had a rough week. Also, they're going to show up in our worst for the week list later on in the show, as Dillard's came apart, and that hurt that group. And then just keep adding on to the tech stocks as the chip stocks continue to get just wrecked. NTAP on Thursday, Nvidia on Friday, which is one we talked about being very weak. AMD also in the semiconductor category. And that all added to the tech woes that we saw. And just as an aside, Bitcoin falling apart. And Bitcoin just absolutely get wrecked, and we have been talking about that one. Bitcoin, it just resumed its crash and moving closer to the target that we came up with at the beginning of this year of about 4,500, that when it was at trading over 16,500. It traded up to close to 20,000. It did on the futures, and all these calls for $100,000 or $250,000 Bitcoin. This is historic bubble madness that we're seeing in here. It's all part of this Fed-created bubble that we saw, and the video that we did on the home builders, and also did that on Bitcoin on Thursday, is one you really want to watch. I'll show you the daily Bitcoin chart a little bit later on also. The oil market continued to be very weak. Also, as we saw a big move down early in the week, now it's trying to stabilize late in the week. As far as the stock market goes, we believe that it started a rally phase. It got down to our low target and timing, and you wouldn't know it by this week. And we think it's going to be choppy and try to establish a bottom here over coming weeks, and then be better into early 2019. But we think the nature of this market has changed. And there's going to be a lot to see in the next couple of months that's going to tell us a lot about where we are. But we think that this bull that we've been in is simply going to limp to its death over the next couple months. The stimulus that we've had, the false fuel for the last 9 years that has led this bull market move up is now, we believe, gone. And all of that fuel, when you start to remove the fuel, of course, there's nothing to push it up but hope after that. And we're going to get some of that moving forward in here. But when you look at things like our Fed in this period now of quantitative tightening, the Eurozone going into the same thing, where they're going to end their quantitative easing process here in December, and now the Bank of Japan talking about that also, and the yen is starting to strengthen. And we have considered the yen to be one of the great plays coming up over the next year, as we think it takes over for the lead in the dollar. So we're seeing the yen strengthen right now, and that's, I think, important. Clearly, China slowing, the Eurozone in trouble, Trump's ability to push anything through Congress anymore, that's all gone, and all of these poor earnings we see, oil crashing, all symptoms of what we're talking about as the end of this fantasy world of government manipulation that we've seen. And I think that this lame bull that we're in right now, it's time to start thinking about taking advantage of when the last hope comes and we start to get some up move again. And I think it's going to be time for some very, very serious asset reallocations for those of you that have been in the stock market for this whole long time. Take that as a very serious warning of things that are changing coming up. Let's take a look at our 60-minute chart of the S&P 500, and you will see in here what happened during the week, the gray area being the overnight session and the white area being the trading that happens during the trading hours, the regular trading hours. We'll start up way on the top left here, and I want you to note the downtrend that went on all week long. You can see that until it came out of it here late on Thursday, and then came down and kissed that trend line, the top of it you can see here, and then started to move up. Our prediction last Friday, well, I don't hate the word prediction, you know, our analysis said that we thought it would fall into the midweek period and then begin to rally, and you could see that clearly here. We got it almost perfect, except for the dip was deeper than we thought. We'll show you that in our view for next week at the end of the show. In the early part of the week, the Brexit worries came in as May canceled the vote. Italy worries, one of their banks in big trouble. The euro and the pound fall very sharply. The Saudis tried to say they were cutting oil production to stop that price slide. It didn't really work when they talked about it then, but then later in the week it did get to stabilize. Citigroup came out bearish on the chips and iPhone, based on iPhone weakness. Apple down 5%, 10 points that day. NASDAQ drops 170 early. Goldman Sachs leads the way down, with the Dow down over 400 points in this move in here. And oil, that had its 11th down day in a row. That's a record for this oil market. And then it broke the record later in the week as it made the 12th down day in a row right over here. Goldman Sachs cut Apple. They say their revenues are to fall 3% on China issues and, of course, slowing iPhone sales. You can blame it on the price of iPhone, if anything, because Apple thinks they could just raise the prices to $1,000 and everybody's going to be able to afford to buy those phones. The iPhones are great, fantastic phones. However, $1,000 for a phone, I don't know. That's why their prices have to come down, and they're going to probably come out with things that are going to lower their margins even more. Oil down 8% to 55 here. It's 12th day here on Tuesday on the downside. And here's where the UK and EU draft Brexit deal got passed. Right over here, and then later in the week it falls apart again. Oil puts on a small bounce, PPI up 0.3%, 2.5% year over year. That does make the Fed numbers, doesn't it? Here's where the Brexit deal falls apart, right over here, and the warning of Itexit, as Italy says they may leave the euro. Here's where the home builders started to move on the downside. Dillard's NTAP drop, and you can see that. So we had this big down day here on Wednesday. You had an opening on the downside of some significance here on Thursday, but then a big reversal. Apple had a big rebound, and that drove the NASDAQ up over 150 points. Pretty big move that you can see right there. Nvidia earnings, they missed here overnight, and that led the NASDAQ down. Was down 100 points overnight, had a big rebound. Applied Materials, very poor guidance also. Then it started to get all kinds of news moving things around. Powell came out and says he's watching headwinds in the market, which is the first sign that they are starting to think, well, they maybe can't raise interest rates much more. And the bond market started to firm on that news. Here we had comments right here out of President Trump. China would like to make a deal. Well, of course they would, but, you know, what are the terms of that deal, Mr. President? And then over here, well, it starts to move down again as it appears that the China comments were just a whim. Interesting how we get that movement around in the markets just on these little whims of the president and his tweets. We have been negative on this stock. What's really interesting is that it wasn't able to really tick up into our sell zone at all to really get anything off over there. Now, I'll just give you an example in here of the positive. This was a positive cycle, ended above where it began. We'll call that positively configured. Here's positively configured, and these are both what we call right-hand translations. They rally all the way through the right side of the cycles and then have only a little time to correct. You could see the low timing here, the low timing here, the low timing here. All of those tracking up the support of the 34-week moving average, which is also very common. We make a new high. We hit the fib target zone between the 78.6 and 100. We get this pattern right over here, which is called a dark cloud cover, and it starts to move down. When it breaks down under that cycle support, it then is negative. That breakdown comes at 238. The stock moves all the way down over here to 161. So just absolutely amazing. Timing suggests that it moves down into the mid-December period. Cycle support comes in at about 152. So that would be a reasonable time and price. That's what cycle analysis gives you, is time and price. So Nvidia down 17% on the week on a very nice or very bad earnings miss.
You have just watched the opening of the Market Week show. To watch the complete show, just go to the askSlim website and become a Level 1 member. It's no cost to you. It includes Slim's cycle analysis on the best and worst stocks for the week, plus his analysis on the short-term view for the coming week. There is always a lot to learn about markets, technical analysis, and potential trading and investment opportunities. You get the full Market Week, including the archives, special viewing of premium videos, sneak peeks to new product launches, and more specials along the way. Just become free an askSlim Level 1 member.
I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been